Folks, welcome to Sunday Night Futures Live. Another Sunday night. I hope you had an awesome weekend. I'm looking forward to a new trading week. And what we're going to talk about today is not much. There's not a lot of news out there. And what news there is not good. We're going to go over Yellow Roadways filing for bankruptcy. So that's 30,000 jobs lost like that. So we'll begin with the futures action. And let's say hello to folks. Futures are up slightly on the S&Ps. That's what you're looking at. Seymour Rivers. I'm looking forward to the episode of Sunday Night. Thank you, sir. Appreciate it. Dan, hello. Paul. Thank you, Paul. Appreciate that. Franklin. Same to you. Seymour, thank you, sir. Thank you. Tom, thank you. All right. All right. So we have the S&P 500 open. We are up slightly. It's like a stream of people just so low. Talon. Louis. Good. How you doing, pal? Good to hear from you. Paul, evening. All right. So we have S&P's up fractionally here. What I'm looking at here is higher lows. That's bullish stuff. It looks like it wants to go up higher. Very, very thin volume here. I mean, this hasn't moved. Let's move on to the NASDAQ. The NASDAQ up fractionally as well. Not much happening here. Very quiet open. One trading day left to go. We just caught a bid. Russell 2000. So 5-minute bar, we're up spot 1.4%. This new candlestick opened within the wick of the prior candlestick. That's usually a bullish event. This candlestick, in all probability, is going to close higher. What we do thereafter, not quite sure. But that's just a little lesson. Whenever you get an open into the prior wick, it's very, very bullish. Same thing holds true. You get a drop down into the lower wick or bottoming tail of the prior candlestick. That's generally bearish. Mid caps. I was looking at the chart of the mid caps relative to the small caps, the ratio chart, and they look very, very good. So we have an outside reversal bar. They initially took the mid caps down, but there were buyers below, and they bid them back up. Let's take a look at the dollar. Why is this not popular? Sorry for that noise. Sorry for that noise. Come on, take a swim. All right, it's showing is up, but we know that's usually wrong. Let's see what the euro is doing in the yen. Yeah, euro, it's showing is down, but it's up. Strange. Every Sunday night, the same thing happens over and over again. Euro is up. That probably means the dollar, in all actuality, is down on the session. Check out the yen. They're showing the yen is being down as well, but clearly we are up on the session. I think the dollar would have to be down right now. Let's see if we can get this to populate. Okay, no bueno. All right, let's move on to commodities. Gold. Gold is down now. Gold had a very, very good week last week. It's either its fourth or third consecutive up week. It flashed a bullish key reversal bar. If you're not familiar with what that is, it's a candlestick pattern. I have a link below to my 5-part video tutorial on my top 5 favorite candlestick patterns. It's free. Take advantage of it. So gold was up along with the US dollar. That generally does not happen. And in fact, it's been up 2 weeks in a row with a rising US dollar. Now, we like to trade the gold mining stocks, and they were down. So we didn't really have much to do in that space because I think they're probably going to move lower. Now, if the dollar pulls back, maybe they'll catch a bid and we'll see what happens. But with the euro yen up at right now, I'm kind of surprised to see gold down. Let's check out silver. Now, silver's it's flat. It was up. Let's go to agriculture. You know what? Let's go to energy first. Energy first. Energy's been on a tear. Oil flat on the session. Now, nat gas is something to watch out for. I'm hoping it's not gapping up right now because I want to buy it, and it's trying to break out right now. I think this is going up higher. We're already up a half percentage point. I think that this was the breakout. They're pulling it back right now to do a retest. My bet is by the time we're done with this live stream, we will have put in a new session higher high. Now, if it fails to hold the support level that it would just broke out of, well, then that's a different story. It failed. Let's see whether or not it's able to break out again. Okay. I kind of hope it pulls back because I want to buy it tomorrow. Let's go to agriculture. Corn futures moving up higher. Soybeans. Up fractionally. Let's go to the weekly charts here to get a feel for where they've been in the prior week. So this is last week's price action, bearish reversal bar. Let's go back to corn. Bearish reversal bar. They're probably going to do a retest for a couple of weeks of these breakout points. Wheat. All up weeks are not made equal. Last week had a lot of topping action, as did the prior week. We're not getting any follow through. So it looks like we're going to get a bit of a pause here on ag prices. Now, the DBA, which is an agriculture ETF, it reversed by the end of the week last week. It was up really, really strong in the beginning of the week. And that's what's sticking in the back of my mind. I haven't looked at it since Thursday or so. Now we have a bearish reversal bar in the week. So we may get a little bit of a pullback in the ag names because that's a pretty bearish candlestick. Home heating oil. That broke out last week. If you have home heating oil, fill up. This is going up a lot higher. I just put in an order today. Let's go to comments. Sean, welcome. Hi, Bob. Good evening, New York Times. Same to you, TZ Burton. India, Brazil, and China are in disagreement on August the 22nd. Not sure how much it will affect the dollar. Probably not much. Hi, Bob. Long time. Tommy! How you been, man? Long time not seeing you. I've been doing really well. Thank you very much. Hope you've been doing well as well. Good to have you. Okay. So I don't have a ton to go over here tonight. We could spend some time going over chart requests because what was the symbol for nat gas? The futures /NG. We're going to be trading BOIL, the leveraged ETF, BOIL. Okay, so let's talk a little bit about the Qs. We have a small short position here. I don't think I'm going to be staying in it much longer because it looks as though the Qs are going to try to break out here. We are in an ascending wedge formation. This is a weekly chart. We are in an ascending wedge formation. There is room to move to the upside. And if you want to take a look at it as a different way, you want to take away this upper band of resistance, you can. Ignore it. You know what? I'll take it off. Let's get rid of it. We have resistance right up here at 388.89. It's called 390 per share. We closed at 383.48. We were up on good volume last week. Stokes are very, very extended on a daily time frame. Now, this is a bullish chart. We reversed off the lower band of support. And when you go to a daily chart, you look at the chart and you say, okay, at least as of Thursday, and we talked about this on Thursday night, that it was a very bearish reversal bar on Thursday. And whenever you get a reversal bar where the stock market should have gone down on Friday after that reversal bar, and it does not. It just tells you that there's a strong underlying bid under the market. You can ignore it. You can fight it, but you're going to pay. So it looks as though the path of least resistance remains higher for the market. But I got to tell you, I have one reason as to why the stock market should continue up higher, maybe two. You have a broadening out of the stock market into the transports and the Dow Jones Industrial Average. Is that good? Yeah, that's great. I mean, if you believe in the deindustrial or the reindustrialization of the United States, those names are going to do well. You had a breakout on the banks. So it's a broadening out of the market. But net, the market is extremely, we're going to go over this in a moment, extremely overvalued. And what I think is bidding the market up right now is the anticipation of a rate hike in September. Let's refresh this because this changes all the time. It's at 80%, no change. So, I think that the market is going to live or die by this metric for the next month. If they believe, by and large, meaning the market participants, that the Federal Reserve will not raise rates, the Federal Reserve will not raise rates. That's just the way it is. If they send Fed governors out to massage the market, get them ready for the rate hike, it'll be reflected in this chart here, but it's also going to get reflected in the equity market. So while we're looking at a reason as to why the equity market could move up higher, along with the reindustrialization of the United States, which is the reason why you're seeing a broadening out of the rally. Okay, that's good. That's good. Good stuff. But when we start looking at, we'll come back to this. When we start looking at events that are out there, and I went over many of these going back to 2008, several weeks ago, about how you had all of these banks over the course of a year that fell out of bed. This is the U.S. Bank Index, if you didn't know that. If you want the symbol BKX, sometimes it's BKX.X, but usually it's, if you're using StockCharts.com, $BKX. So this is the banking index back in 2007, 2008, and it was like a death by 1,000 cuts all the way down. Now, here we are yet again in the banking index where you have Silvergate. It went belly up. That caused that March reversal breakout on the yield curve, which sent equity prices down. By the way, yield curve steepened last week and the stock shrugged it off. Then you had Signature Bank, SVB. Then Credit Suisse got bought out. First Republic. This is just last week, the week before, Pac West. I haven't even heard about this Heartland one. So the dollar amount that has gone underwater in terms of uh, enterprise value of equities far, far exceeds what we saw back here. Yet the markets are shrugging it off. Why? Because the Federal Reserve is backstopping depositors. Another reason, and I want to come here and tell a good story. I want to come on and say the reason why the charts look so good is because you have the yield curve that has normalized. You have loan demand that's rising. And I can't say that here. Here's a corporate loan slump is in a recession indicator. Whenever we're down here in the shaded area, that's recession. These are all recessionary indicators, but it's different this time. I guess so, if you want to believe that. Now, I didn't go over valuations yet, but I think it's appropriate to do that. Right now, we're more expensive on this market after all the earnings that were released last week than we were last Sunday. The value of the average PE has gone higher on the Shiller PE ratio. Here's the problem. S&P 500 reporting a year-over-year earnings decline of 7.3% for Q2, which is being reported now, which is the largest decline since Q2 of 2020. And here you have it. Yet stocks look like they're going to move up higher. I think we already went over this one, right? Yes. This is redundant. I think I just closed one out that I wanted to go over. Oh, yeah. Let me go back and get that. It's an interesting one. It's a listogram about luxury goods. So it looks as though even the rich are beginning to bitch. Pardon the bad words. It's a family-friendly show. What do you guys think of X for Twitter? I don't get it. I don't know why he did that. I mean, Twitter's a brand. I don't understand why he did that. So here's a chart of luxury goods. Congruent with our commentary about LVMH, luxury spending slowed to a negative 7.6 year-over-year recession in June, equaling a 9-month negative year-over-year growth. Look at the decline in luxury goods. That's pleasure boats, aircraft, jewelry, watches. The rich are tightening up. Why? Thought everything was so good. We have Yellow Roadway. I mentioned this earlier. Could shutter within days. They're going to shut down. They're going to shut days or weeks. They're not going to be in business. Laying off 30,000 workers. Yet watch non-farm payrolls come out for this month or next month when it reflects that these 30,000 jobs, and they're going to beat by a mile. The household survey, that'll show a decline in jobs, yet the establishment survey, so appropriately named, will show a beat on jobs. So basically, here's where they're at. They have about $100 million in cash, which sounds good, but it is reasonable to believe that the company could breach its $35 million liquidity requirement. So it's going to be in breach of its requirements on its loans. It goes under. That's done. So unfortunately, a lot of people are going to lose their jobs. And unfortunately, what's going to happen here is that you're going to have a major player in the transportation sector out of business. What does that mean for packaged goods? That means that the cost of shipping is going to go higher because their competitors are now going to have pricing power. So this is inflationary. So you have 30,000 jobs lost. So they're going to be feeling the pinch because they're not going to have a job, yet prices for shipping costs are going to go higher. Yet equities, they're going to go higher. Okay. All right, let's talk about economic data coming out this week. It's going to be a jobs week. So we have A couple of reports coming out. S&P manufacturing, which is going to come out on Tuesday. Any read below 50 is a sign of contraction. Last read was, the expectations for contraction at 49. The prior read was for 49. So you're seeing, this has been a while now, contraction in manufacturing. So that really puts a question mark next to the reindustrialization of America if you have a decline in manufacturing. Job openings, they don't have an expectation, but the prior read was 9.8 million. ISM manufacturing, that's in contraction as well. And on Wednesday, we get the precursor to the Pimp Mac Daddy of them all, non-farm payrolls on Friday. ADP comes out, expectation of 173,000 new jobs. We get jobless claims each week. Productivity, very, very important. Factory orders, but this is going to be the big one. And pay attention to average hourly wages. That's what the Federal Reserve is going to be watching like a laser beam focused on. So non-farm payrolls, let's see if they have an interesting headline here. The link won't work. Okay. What else do we have? We have earnings coming out. We have SoFi tomorrow morning. Other than that, it's going to be a quiet session. RAM is very volatile stock. So we have some energy plays coming out tomorrow. Transocean. We have Diamondback, CVR Energy. Then on Tuesday, we get Pfizer, Merck, AMD after the close on Tuesday, Starbucks. What else is interesting here? Not much. After the close on Wednesday, PayPal, Shopify, Qualcomm, Etsy. Then on Thursday, Cheniere Energy, Moderna. And then after the close, we're going to have Amazon, Apple, Coinbase. Coinbase looking good for a setup. Block, Airbnb, Cloudflare. On Friday, we're going to have Nikola and more energy plays this coming week. So it's going to be a busy, busy week. And we already have a good picture. I already went over it about how earnings look, and they're not great. Yet multiples are expanding. Okay. Let's do some chart requests. We have a lot of time here. Very slow news day. Usually right before I go live, they put up like 5 stories. That's why I'm blowing through them, because I try to read them quickly, highlight as much as I can, because then all of a sudden it's time to go live. Oh my God, they're back. CDC at the precipice of recommending annual COVID-19 shots. They have no humility. These arch demons have no humility whatsoever. There's a special place in hell for these people. What else? Anything else? That's pretty much it. Just some lizard people work. All right, let's go to the members area. See if anybody's requested anything. We got Talon, I believe, with his requests. I know it's Talon because he's got T-Doc on there. $3M, Tupperware. I think we already did Tupperware. Also skipped it. All right, do we have any others in the request area? You got it. Yeah, Intel had a blowout number last week. I went over the chart yesterday, and it looks really good. So, yeah, we'll definitely cover that. NG is natural gas. Yes. Correct. Steve Van Meter has been following the bank collapses. Yes. I don't like X, but I like the new sign in San Francisco. City Hall pissed off. Elon, the master troll. He is, man. He is. Sam. And we have Marvell Technology. All right. Trader Isaac. Hello, Bob. I'm an XLE for swing trade versus 84 level play. Oil, energy, his gas codes will go up. I pump and Biden eventually fills reserve. Yeah. It's looking good. Yeah. Oil prices look like they're going up higher. There's not much more they can dump out of the Strategic Petroleum Reserve. I don't know. When I think of these people in Washington, the word treason just keeps coming to mind. Treason. I don't know why. Maybe I'm a conspiracy theorist. Treason. Let's get to it. Folks, we're going to be using TrendSpider. They have a 60% discount. So use the link below. Go over there, take advantage of it. I don't ever recall seeing a 60% discount. So take advantage of it. It's only I know it expires. Think today. Kelly, because that's exactly what it is. There we go. There we go. I'm with you. I would love to be wrong, but it's too obvious to be wrong. Okay, let's kick it off. TeleDoc. This is for Talon, one of our esteemed members, a chef in his own right. We have a breakout here. I mean, you got to like it. And I think their earnings were really, really good. Because I remember them reporting, I think it was Talon that brought it up to me, and I took a look at their report, and it looked pretty good. Let me go see. I'm going to go to Investors Business Daily and take a look at their stats. Not good in stats in terms of earnings per share growth, but you really need to look at the growth rate. And the growth rate here, 3-year earnings per share growth rate, 54%. EPS change, 64%. Wow. And EPS change last quarter, 72%. And a PE ratio of 25. What's not to like? So let's go back to the chart. So we have a big grower of earnings here, breaking out on a weekly chart. We have a W formation formed on stochastics. So it looks as though we're lifting off here. Let's go to a monthly chart to get a better feel. Yeah, this thing's been left for dead. I think that this is breaking out in a very, very big way. Now, what might happen here, especially if the market shakes out a little bit, we may get a retrace here. Retrace. I want to get in on any retrace back down to support in August. And this is one I don't know whether or not it's optionable, but we will check, or I'd be willing to sell premium. Yep. So now what we want to do is say how expensive or how cheap Are those options? Is it worth it? Is it worth the risk? No. Only if you want the shares. You need to go close to the money, try to get the shares at a discount because you want to own the shares. Because there's very little implied volatility here. If you're an options trader, this is not one you're going to want to sell premium on and hope not to get filled. Because if it goes against you, IV is going to blow out. You're going to get trapped. So be careful. If you want the stock, then fine, sell premium. In fact, let's do this. We have time here, so if you don't mind, I'm going to play a little game. We have monthly resistance. We close at 28.26. Wow, pretty close to the money. So if we wanted to, we could sell 27.50s, get 44 cents. I would want the shares. So I would look to sell the premium to get a discount on the share price. So I think that's the play here. Let's go to the daily chart because, excuse me, the share price on a daily chart is probably a bit extended relative to, oh no, it pulled back. Nice. This is a buy. This is a buy. Just do it. Do it. Nice. This is exactly what you want to see. This is exactly what you want to see. If you would have asked me about this at earnings or the day after, I would have said avoid it because it's trading up and above. It started standard deviation, Bollinger Band. Wait for the pullback. Wait for the retest. You got it. This is the green light. This is the green light. So this is looking good. Very, very bullish on Teladoc. I think it goes up higher. SPHR, Blue Zeton. How are you, sir? SPHR. What else do we have here? Great minds, Kelly. Great minds. BLDR. Let's take a look at that. Bob, I'm in LABU and listen to your insights. Do you see a head and shoulders formation on the daily? Thank you, Dorsey. We'll take a look at it for you. We spent some time going over LABU over the weekend, and I kind of like it here, but it's got to do a couple of things. We'll go over that in a moment, but we will look for that head and shoulders setup on a daily chart. Kelly, what time frame on Stone, daily, weekly? Okay. So Teladoc, bullish. My man Talon. 3M. I'm bullish on 3M. I already know what the chart looks like. I love these down names right now. They're all beginning to break out of very, very sound bases. 3M, no exception. A nice breakout in a monthly chart on massive volume, momentum building. Excuse me, weekly chart. Weekly chart, my bad. Let's take a look at a monthly chart. Beautiful breakout on a monthly chart, daily view. Daily view, we're flirting with resistance above. So I wouldn't be the least bit surprised to see a continuation pullback here. We had a reversal on Thursday, but still closed positive relative to the market. The rest of the market was negative. They closed, actually, it closed down technically, but it closed off its session highs. The price action on Friday was a doji star formation. That's a sign of indecision. So again, one of my top 5 favorite candlestick patterns, 5-part video tutorial linked below. Take advantage of it, free. Because I want people to understand the terminology so I get to grow this audience a little bit more. So this is not a bearish setup at all. But when you get a doji star formation, it's just a sign that you may get a reversal of the immediate trend, and that trend is up. So we may get a pullback here. Would I be a bit surprised that we see a continuation breakout? No, it's moving up higher. I like the chart. I think that ultimately 6 months from now, 3M is going to be higher than where we're at right now. Kelly, daily. We will look flag formation, daily setup. I just noticed that Teldoc has 16% short interest, if that matters. What I go by is this. I don't rely all too much upon the short interest. What I do is I look at this. I go over and I look at the statistical data. And you are correct. You're right at that 16% range. What I like to do is this: I take a look at the number of shares float, number of shares held short. That's 26.3 million. So the average daily volume is 4. That's about 5.5 days to cover the short interest in the stock. So sometimes the when you use the math of just simply going by the number of shares short, you take a look at the daily volume. Well, they could be able to cover that short interest in 1-2 days. So not much of a short squeeze. In this instance here, you have a situation where you're right. You have a multi-day short squeeze candidate. So interesting. Thank you for bringing it up. And another reason why the shares are probably going to move up higher. Keep in mind, though, this is old data. This is as of the 14th. So some of those names may have been squeezed out already. Hello, sir, to you too. Do you have any thoughts on job opportunities rising or dropping in tech in the next few months? They've been laying off. So it depends upon, I think, how AI goes. I personally don't think that AI is prime time ready yet, but who am I? I don't know. But I play around with Chat GPT, and it's good for. I think that writers, script writers, I think that copywriters, their days are good. The days of the buggy whip are here for them because the technology is here. Is it here for the rest of the tech sector where they could be replaced? No, I don't think so. You're welcome, Kelly. Okay, so that's 3M. Short term, a little bit bearish on it. Let's see if it breaks out because you have resistance immediately above. That's the value of the automated trend lines. Let's see if we have any weekly resistance above. Monthly. No, but on the monthly chart in dashed line, we're still on a daily chart. But what you're able to do here with TrendSpider is overlay monthly support and resistance onto the daily chart. And this is the monthly 9-period exponential moving average. Traders use this a lot, not necessarily on a monthly time frame, but on a weekly, daily, intraday time frame. So what we're doing here, you can see how this is acting as support. You wouldn't know that if you weren't able to overlay this on a daily chart. So it's a great functionality. Again, they have 60% off. So I love the functionality. Sorry. So yeah, am I pitching it? No doubt about it, but for all the right reasons. I don't really pitch much anything else because I don't trust many other products. TUP. Now, Tupperware is a company that had ongoing concern issues. Maybe they're resolved for all I know, but I'm putting it out there. They were in a lot of trouble for a while. So I don't know the reason for the spike up. Could it be a Wall Street bets type deal where they're squeezing shorts? Maybe. I don't know. It is coming off of its lows. Let's take a look at the fundamentals here. We have some time. Let's use it. Where is my, here we go. Yeah, earnings per share is horrible. You know, they're talking positive about the technical and that technicals of the stock, but that doesn't mean it's going to hold up. No news. Shares outstanding 44.5 million. So we go back to, doing that analysis again and saying, okay, is this just simply a short covering rally, and can it continue? So 27% of the shares are held short. 9 million shares are short, but the shares trade nearly 11 million per day. So this is an example of where that entire short interest, where it looks very, very high and very, very positive to go in there and take advantage of a short squeeze. Just keep in mind that it's heavily traded and there's a lot of liquidity for those shorts to cover into. And apparently not enough of them did that ahead of earnings, and they got burnt. So getting back here to Tupperware monthly chart, we have a breakout. We even have a breakout on a weekly chart. Daily chart. There's more room to go here. I don't know why my Bollinger Bands are up here. Where are my Bollinger Bands? Oh, it's outside of them. That's why. We're still up and into the third standard deviation Bollinger Band. So I would say avoid this right now and look for a reason, a positive reason of as to why it should go up. You don't want to get involved with an ongoing concern issue, meaning all of a sudden the game of musical chairs at the company comes to an end. Let's see how much cash and debt they have. They have 110 million in cash, and they have 700 million in debt. Gross revenue declining rapidly, and they are losing money hand over fist. So on a fundamental basis, I see zero reason to own this stock. So just be careful, please. Intel. Now, Intel is a different story. This is a stock that has been left for roadkill. And if you folks like me going over Investors Business Daily along with the charts and the analysis using Yahoo Finance that we just did, let me know. If it's a good thing or a bad thing, let me know. And if it's positive, then I'll adopt it and we'll do it moving forward. Okay, so it's expensive. PE ratio is 47. ROE, return on equity, is horrible. I mean, it's certainly not best of breed. I think it's just playing catch up with the rest of the chip names. On a fundamental basis, I'm not loving it. On a technical basis, it looks like it's ready to lift off. I would need to go back to their earnings report and hear what they have to say about forward-looking guidance. You're going to have resistance. Again, the value of having this, in this case, it's a quarterly overlay. Quarterly overlay resistance at $40.81. So just be aware of that. If I was long, I would set an alert. If we hit that level, I'd make some profits real. Weekly view. It looks like it wants to go higher. We're very close to a breakout. We did not break out last week. Volume was very, very good. a good gap up, but we gapped up into earnings. There is gap to be filled here. Doesn't mean it has to happen right away, but we could see a filling of the gap, especially if the market looks a little bit shaky. Let's go back to the futures for a moment. I just want to touch base and see what we're doing out of curiosity. I focus a lot on the NASDAQ. And we have, as I mentioned earlier, the stock market wants to go up. Now we're up spot 4% and rising. RSI now it's 7. This is a 5-minute chart. RSI nearly at 75. Let's take a look at a 15-minute view. So yeah, equities are moving higher. But I just wonder if they're going to be able to hold this move up higher all night long. There we go. I didn't put the dollar sign. The dollar is flat. Okay. All right. So that is Intel. Seymour likes it. That's a yay, huh? Kelly. That's 2 yays. I appreciate your explanation of the market movements in an understandable manner. Thank you, Seymour. It's very nice of you. Hi, Bob. BA had a massive breakout. How would you play it? You think it continued? Yes, I think it continues. We'll talk about the play in a moment. I did a video about 4 weeks ago about Boeing. It's on the website. As a matter of fact, how much time do we have? I don't want to get too crazy. If you're interested in it, content. And folks, if I could ask you to please like, subscribe while I'm doing this, and I'll get that video right here. So here's the video. See that thumbnail? I made that thumbnail. I'm very proud of that thumbnail. So I'll share this out if you're interested in watching the analysis. When did I do that? It was bullish analysis. When did we do this? 3 months ago. Okay. All right. So we have Trader Isaac, IBD, and okay. Delon Incorporated. You got it. All right. So the yays have spoken. I haven't heard from the nays. If there's a nay out there, make yourself be heard. The yays have it. Okay. That's Intel. A little bit of resistance up here. Fundamentals not that great. You got to look at the forward-looking guidance to say, okay, this is the reason why the equity is moving up higher right now. So I wouldn't be a buyer until I had that little bit of question answered, because a multiple of 47 is pretty hot for stock that is not growing. Sam Adams. Beautiful, beautiful breakout here on the week. Wow. I wouldn't be a buyer here. Not quite yet. Awesome volume on Friday. Let's go to the intraday chart. I want to see how they closed it. So you may get a pullback here. I would, if you're looking for an entry point, a pullback to 355 would be interesting because you have support down there. Because they closed it right into a fractal trend line. This is a Keltner channel. So it's going to be a little bit of resistance there. You can see how they blew through it and the sellers moved in and they sold it off. So you may get a continuation move lower, but that 355 mark looks pretty good. How were their earnings? They're number one in their field. It's certainly not going to be Bud. EPS is not wonderful. The sector is in fuego. It's under accumulation. And the shares are under accumulation. That's institutional accumulation. Not a cheap stock. I mean, this is a discretionary stock, and it has a PE multiple of 53. Again, another reason why I would say let's go take a look at that forward-looking guidance for the whys behind this stock moving up and warranting this type of a multiple. You know, could it be because they're eating the lunch of Budweiser? Maybe, but you need a rock solid reason as to why. EPS change this current quarter was 36%. So they're coming out of a no growth period, and they saw sales ramp up 36%. What drove that? That's the question that's got to be answered. Is it from Bud, or is it because they're new products, right? Because if it's from Bud, okay, so they probably took as much market share as they're going to get. Maybe it'll float into another quarter, but that could be a one-time thing, maybe a two-quarter thing. You really want to see product growth. Organic growth in the business. So that's Sam. What else do we have here? Marvell. You have what's required for a higher high. You have a higher low. You have a little bit of a volume shelf immediately above, but this could clearly break out. On a monthly time frame, you have wow. Oh, I'm sorry. You know what? You're above this resistance level. That's very, very bullish. Very bullish price action. It was down on Friday when the rest of the market was up, but it is consolidating. I think you could buy here. Would put a stop loss right below the lows of July the 26th. If you break that, that means you're going to be breaking support levels as noted by the automated trend lines, and you'd want to get out. So I'm okay with buying here. Just keep in mind you're going to have resistance up around 67.50 per share. Kelly, AI has a similar look as Marvel on daily. Yeah, AI looks like it's struggling a little bit. And this is not necessarily overly bullish either. Consolidate. Yeah, you're right. So we broke down below the lower fractal trend line in red, or Keltner channel. And I would say that AI is a little bit more bearish because we broke support on Thursday. They attempted to recapture on Friday, no deal. And you may just see a pullback further on AI. So good observation, but I'm a little bit more bearish on AI than I am on Marvel. Moving on to SPHR. Wow. This really moved. What's this company all about? I don't know this company. No EPS. There's no PE because they don't have any earnings. I don't like the fundamentals here at all. So no go on a fundamental basis. On a technical basis, it's come a long, long way on this weekly chart. And I'm not saying it can't head up higher for whatever reason why it's rallying, but the shares are leaning into the third standard deviation Bollinger Band, and that to me automatically is, I say no way, because you're going to get a retracement. It's just a matter of when. These types of flirtation with the third standard deviation Bollinger Band don't end well. They don't end well. When the SPACs were the hot thing, I warned, and I was like the biggest party pooper going. I said, please do not touch these stocks. And now a lot of them aren't even around anymore. Daily chart, we closed right at resistance on Friday. So to me, this is a no-go. I would not buy this. Would I short it? Probably not. Probably a lot of Yahoo amateur longs in there, YOLOing, and I don't want to short into those guys. So I would not. Is it optionable? Because it's certainly one where I would look to perhaps sell premium out of the money. Yeah, I would, but there are no options. So to me, this is, you got to avoid this. You have RSI at 87.5 on a daily time frame. The fun's been had here. I would walk away from this. I wouldn't even short it, because sometimes you have a very low float on a stock, and the shares can also be tightly held by management, and you don't want to short into those situations. This is short data since June. I think that after the run that it's had, you don't want to short this based upon these statistics. Management owns 5.8%, so that's not a concern. I wouldn't touch this. I would walk away. There's more game to be had than this one. This is a little bit. It's already run its course, and I wouldn't short it. I would, if there were options, I would have sold premium deep out of the money, but there are none. Therefore, I walk away. All right, BLDR. You are welcome, Franklin. Thanks for being here, pal. Is it 7 o'clock already? Yes, it is. All right. BLDR. This is going to go higher. Even you have a bearish reversal bar here. That's the only thing I don't like. It flirted with a breakdown, but what they did is they bid it. There's an underlying bid here. Again, it goes back to what I said earlier about the stock market having a very, very bearish Thursday, but there was no follow through. And in fact, you had a higher high on many indexes on Friday. When the market doesn't do what you expected to do, that means there's a strong underlying bid, and you're seeing that here. So I think that this goes higher. Daily view. Up day on Friday. I think that we're probably moving up higher. Watch for resistance up at around 154 per share. And LABU is next up. Do we have a head and shoulders setup on a daily chart? Do you mean this being the left shoulder, this being the head, this being the right shoulder? And actually, the lower band of this Keltner channel is the neckline. So, yes, I can see that, but I don't think it's going to follow through. Okay, so, yeah, I agree with you, but I think that this is probably going to move up higher. But in the back of my mind, I would keep what you, if we break down below the lows of last week, then we're probably going to come down and retest that support level. and see whether or not we break that neckline. So good observation. I like it. But I think that this is probably another way to look at this is this way, is that we rallied off of the $5.50 mark up to the pivot point at $6.64, pulled back, retested prior support. Now we're beginning to build the right side of that W formation. That's what I'm looking at. It's a shorter term duration than what you're looking at, but you have a valid point. So if we see weakness here, that could play out. I don't want to poo-poo it. It's quite possible it could happen. So good observation. Okay, Stone, does it have a flag formation on a daily chart? Well, it's kind of in the rearview mirror, but yes, I think I know what you're talking about. Let's zoom in here a little bit. So it's a classic bull flag setup, and we broke out. So it's kind of in the rearview mirror, but I know what you're saying. Yes, it's broken out. You do have resistance at the Keltner channel. It could easily get through that. Resistance up at 1441. Once you get past there, the stock rallies up to around $16 a share in that neighborhood. Last one up is Boeing. You're welcome, Dorsey. Yeah, that's a shorter term time frame, more volatile, but yeah, if we break that support level on that W formation, then your thesis comes back into play. BA. So BA's had a heck of a run here. Let's go to the weekly chart. We'll go back to the daily chart. On the weekly chart, this could still head higher. We are leaning into the third standard deviation Bollinger Band. It means it's come too far, too fast. Doesn't mean it's going to crash. Doesn't mean you want to short it, but you may want to sell premium, maybe a credit spread or something like that. Call spread. They could still limp this up higher. If you get up to 246.68, that's where I would really look to open up, perhaps even a debit put spread, and look to short it using some short options to scalp a profit. But I wouldn't stick around long. I would just scalp it and be out, because otherwise, after this pulls back, consolidates, I would want to be a buyer of the shares. So where would we want to be buyers of the shares? Let's go to a monthly chart really quick. And here's a classic inverted head and shoulders setup. Left shoulder, head, right shoulder, and the neckline is in the rear view mirror. What I would do here is I would look for a retrace back down to this volume shelf at let's call it 230 per share. And we're going to keep this active for a few weeks. And then we set it and forget it. Unless there's another entry that I like better, I'm not seeing it yet. I think we need to retrace. That's what I would do. I think that's the only game in town for Boeing. I would not buy where we closed on Friday afternoon, because it may head up higher, but ultimately you're going to get that retrace. You're probably going to get a better value. If you want to play it right here, right now, think about selling puts at the 230 strike price. That's the way I would play it right now if I was going to trade it. Everyone, thanks for being here. Please click like, subscribe, hit the notification bell so you know when we go live next time. Yeah, Dan, it always flies. Amazing. Thanks for being here. Have a profitable trading week and an amazing Sunday night. Be well.